So 2020 and 2021 have been like two crazy years as far as like economics, investing, personal finance are concerned. Obviously 2020 we saw the astronomical rise of like tech doing really well because of lockdowns, the pandemic. 2021 so far we've seen crazy rallies of things like Bitcoin with the US dollar uncertainty. We've seen like Wall Street bets. Basically, it's everything that they say seems to be doing extremely well these days. And while on the one hand, I think it's great that people have a great understanding, more knowledge of financial markets or investing, personal finance, economic policies, business, business strategies and stuff like that. It's great that people understand more of that. But I've seen a lot, even me myself, I invest a lot. I talk a lot about it on my channel. But I've seen a lot of people kind of promoting it, like, yeah, invest, make money, triple your portfolio in a week, all this madness going on. But I haven't really seen many people talking on the other side of the argument, the not necessarily negative side, but anyone that has more of a, a balanced perspective. So I'm kind of making this video now to kind of offer my 2 cents on why I'm not investing anymore. This does come off the back of, well, not even off the back of, I haven't even done the video yet, but I've been looking at, not Wall Street bets, but I've been looking at, my portfolio, my net worth and things like that, just so I can make I'm going to make a video in the coming weeks, detailing my net worth, exploring my portfolio in more depth. But as I was doing that, I was looking at my income, outcome, my expenses, my budget, all my stuff put together, and I was like, damn, I really do want to buy into the dip right now. I see Tesla's trading at like 6. I'm not going to open the laptop again, but it was like 685 or something. Bitcoin is actually right back up now. It's an interesting time in the market, a nice dip to buy into. But I was like, is this really the right time? Not just to invest, but like for me to actually put my money into the market. And lo and behold, if you haven't guessed from the title of this video, I've got 4 reasons, but 2 of them can kind of go into one. So basically 3 reasons as to why I'm not investing anymore. This obviously is short term. Eventually I will plan to invest again in the future. I'm a strong believer that investing is a better strategy than leaving your money just doing nothing, basically. Or even worse, like in a savings account. But like, yeah, let's talk about that. Let's talk about that. I have this book. I don't know why I picked it up. It's been on my lap since I started recording this video. I guess I was waiting to like segue into like, a nice joke or something, but I don't know, it's a good book. I Will Teach You How to Be Rich by Ramit Sethi. It's a good book. I read it once. Should probably read it again to be fair. It's pretty interesting. Yeah, the plug never came, so so that's just the segue we've got to live by. But anyway, here's the 3 reasons why I'm not investing anymore. The number 1 reason, which I think most people don't, I don't know, I feel like some people don't really even think about this as much as they should, because it's actually really important. But the reason why I'm not investing at the moment, or why I'm going to stop from, at least the next 6 months, is because of a lack of an emergency fund. Now, most people do have savings accounts, which they kind of do treat as almost like an emergency fund. But the difference between having savings and an emergency fund is that your savings is generally saved towards something. You want to save towards a car, a house, or just general savings that you want to have money aside you can spend eventually. An emergency fund isn't supposed to be spent unless of an emergency, as you can probably imagine by the name. Maybe your car breaks down, you got to put some money towards fixing your car, like a pipe might burst in your house if you own the house yourself. Obviously I'm renting as a student, but still, for someone else might need to worry about house concerns. For me it's basically just my car, or, I don't know, my phone, I might lose my phone and it's not insured, so I might have to like buy a new one or something. So having an emergency fund in case things go wrong is very, very important. And it's something that I don't have. And even though I do have savings, and even though I do have my short-term expenses kind of covered with that savings account, it's very, very important to me now more than ever. Because 2020, I mentioned earlier at the start of the video, we've seen a massive rally, kind of like everything went up, at least as far as tech and the fund stocks are concerned, all kind of went up. But that's not really how the market works. Stocks can't, they can go down as well. People saying stocks can only go up, that's just not true. Your capital is always at risk. And we've seen in the last couple of weeks, especially last week when the whole microchip shortages everywhere, like the stocks just plummeted. And even though, yeah, the idea is you want to be in the stock market for a very, very long time, volatility and uncertainty mean that, as I said, it can go up or down at any point. And having your emergency fund all invested, which is where I am right now, it's not a great idea, because even though, the dip that we're seeing right now is still not that deep, because I'm still overall in very, very high positives. Like Tesla, for example, is up like 200% since I invested it. So unless it drops, it's not even possible to drop 200%. It'll have to drop, what, 50%? To be the same as that. Like a 66% drop would be equivalent, I think, to 200% of a gain from before. Do the math yourself if you don't believe me. But but it's not wise for me to keep all my money in a place that could end up, the whole point of an emergency fund, as I said, is that it's there in case of an emergency. So now that everything's dipped, if my car breaks down, like it did, and I did have a car crash not long ago, suddenly it's like, oh damn, I haven't got the money right now. I mean, I did, but at the same time, it kind of triggered something in my mind and made me realize that I do need to have some sort of emergency fund separate from my investments in case I do need to use it at some point. So number 2 and 3, I guess, and I was already kind of addressing number 1 as well. So it's like, it's a side thing, which is like short-term risk, but then, that entails volatility, which is the second point I was going to talk about, and uncertainty, which is the third point I'm going to talk about. So covering volatility first, because I said it can be something I talk about. Volatility, as I said, it's also going to go up or down at any given time, and yes, you can kind of gauge the market. Like if right now, of course, you see the microchip shortages, you can look at that and say like, okay, maybe tech won't be doing so well right now because they're going to struggle to manufacture parts. And that's a great observation, but it's no easy way to observe that in hindsight. Not in hindsight, but like to have the foresight in the future to know like, okay, maybe next month Tesla might go down, or Bitcoin might go down, or Apple might go down, Moderna might go down. I'm trying to think of my portfolio. Neo, I've got a lot of tech. I'm very, very overweighted in tech, to be fair. Cheesecake Factory, I'm investing in Cheesecake Factory. They might go down as well, I don't know. But it's like, yeah, you do want to... It's possible to do the research, but it's almost impossible to have... Well, I mean, not even almost. It's literally impossible to have 100% correct prediction rate. And especially right here, right now, 2020, 2021, where we're seeing all this madness going on, like vaccines going up or down, the microchips going up or down, lockdowns here but not quite there, or like rates going up here but going down here. So much uncertainty, so much volatility, and what that means in the markets is that, as I said, it can go... Any stock can be up 100% one day or down 100% the next day, and there's no easy way to call it. And as I said, in the overarching theme here I'm talking about when it comes to short-term risk, do I really have the tolerance right now to see all my emergency fund drop down to 0 overnight? Not really. Even if I did have an emergency fund separately, would I still have the patience to see my whole portfolio dip overnight? Not really. I mean, that's kind of the whole point of behavioral economics, I guess. Well, it's more like behavioral investing, I guess, because this isn't really economics. But the whole point is the whole psychology behind investing is like people are willing, when they start seeing things go up, they're not really willing to sell. They're like, oh, let me see how long I can ride it out for. And when you start seeing things go down, you're suddenly urged to sell. Like, oh, I don't want to, let me cut my losses and put it somewhere else. It's easy to talk about that and then to try and overcome that. But in the moment, when you just see red, and it's anyone's game. But again, the fundamental point again is a short-term risk. Can I afford to take that risk on? And that couples in completely well with uncertainty as well. Where you look at how uncertain things are, you don't actually know. Of course, the UK recently announced we're going to be coming out of lockdown June 21st, and everyone's like, oh, June, yay. But who knows what might happen between now and then. There's so much uncertainty. Yes, I do keep track of the news. I've mentioned this before, but if you're a student, you get free access to the Financial Times, which I've been banging out, and I've been abusing that. I stay up to date and know what's going on, but all I know is what's publicly knowledgeable, what's that called? The information arbitrage, I think. Because it's like what you see versus like what's happening. I'm always going to be at the back end of that. The newspapers say like this company's lost loads of money in a lawsuit. They don't say this company's being observed by a law company. I'm talking smack right now, but it's like you only really find out when it's too late. Or if you see like GameStop, I saw loads of people buying in at like 300, 200, 150. But by the time it reached 300, I'd already gone through the news cycles. All the people on Wall Street Bets had seen it, put the money into it. You're finding out too late, and that's kind of meandering into the final point in this video, where everyone's kind of looking for the next big thing right now. Everyone's looking for, oh, where can I make my money? Where can I make the most money in the shortest time horizon possible? And what that's leading to is everyone, trying to get involved. There's a massive push for involvement. Like, I want to get into GameStop now. I want to get into Tesla now. I want to get into Bitcoin now. But what most people recognize, this is a classic quote from Warren Buffett. He's like, be greedy when people are fearful, and be fearful when people are greedy. Right now, people are greedy as hell. And I'm not trying to fall into the trap of FOMO investing. It's not like, oh, you know what, everyone's buying Bitcoin, so let me also buy Bitcoin. I mean, I am personally bullish on Bitcoin. I don't have any in my portfolio. I'm not going to tell you to buy it because I don't own it myself. But I do think it is the currency of the future. But of course, I'm not investing right now, as this whole video is talking about. But you see people buying in at just random prices because they just think, you're doing it, so I'm going to do it. And that whole fear of missing out, the whole FOMO investing scene, very stupid. It's even worse than the whole meme, because at least meme stocks, like, you're doing it for a joke. That's kind of the point. Most people that put money into meme stocks are prepared to lose to some degree, because that's part of the meme, right? Whereas people that are just FOMO investing, that just putting their life savings into something, you're taking on so much risk you're taking up infinite risk basically, because you can effectively lose all of that, and for what? Just because you wanted to be involved in the scene. I think that's very stupid. I think investing now, and always has been the case, you should always do your own research first. Never ever buy a stock because your friend said so, because your financial advisor, if they say so, of course do that. I'm not myself a financial advisor, so don't take this on as some sort of like, as like a law or anything, but always do the research yourself, because if you're not prepared to lose what that stock might lose or that fund might lose, and then you end up losing that in the end, that's going to be completely on you because you haven't done the research. And again, if you have done the research and you know it could fluctuate, you might know that a certain stock is very volatile. You're not going to feel so bad if you've done the research and you say, you know what, in 5 years I think I'm going to be up 10%. You're not going to feel so bad if it dips between now and 5 years time, because you know what your research says. You've done your fundamental analysis. You know that within your certain time horizon you expect to make this much, and you're willing to ride out any lows or highs in the meantime, so long as of course you have your short-term expenses covered in the meantime, including an emergency fund, with something that I missed out on. And you want to make sure, as I said, that you know what you're doing, because if you don't know what you're doing, anything can happen, and then that's where the whole behavioural side comes into it, because you start to panic, or you start to just think, maybe I'll wait until the next dip or whatever it is, and that's just not really where I want to be right now, and it's not really the scene I want to be in again when I don't have a fundamental level. I don't have an emergency fund. I haven't got that platform right now to build up off of. And even though yes, I can afford to ride out some losses, I'd rather not. I'd rather be able to put money in there and then delete the app, or like not log into the the stock brokerage for a couple of months, no matter what happens. Having to log in every day now and be like, oh damn it, things are down. It puts a lot of weight on my mind that I'd rather just not have on my mind. So yeah, that's essentially it. Basically, don't invest. Don't put your short-term expenses into your investments, because it's too volatile, and it's always going to be volatile. You should never ever invest for less than like a 1 year time horizon anyway. That's like a general rule, not from me because I'm not a financial advisor, but if you do your research, people will generally say investing is a long-term solution. And I put down, yeah, you want to avoid FOMO investments, because if you're in, get out. If you're not in, stay out. That's kind of like my mentality. If I was in on Bitcoin, I'd probably get out right now because it's a bit crazy. But I'm not in Bitcoin, so I'm gonna stay out. I'm not gonna, fall for that FOMO nonsense. And with all that said, that's essentially it for this video. I do have a lot of videos planned for the future, but I don't know. It's a very interesting times right now. I'm trying to focus more on my work, so I will continue to be putting out a bunch of videos. But don't expect any like brand new seasons anytime soon. At least up until like the spring maybe. But yeah, I don't know why I put that in this video, but yeah, that's it. So so yeah, I hope you guys have enjoyed it. Opinion Corner coming soon, season 2 coming soon. But other than that, it was nice talking to you guys. I hope you're all doing well in the lockdown. Hope you're looking forward to finally getting out of this damn lockdown in the UK. And yeah, until then, keep watching videos. Other stuff. Peace.